Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right, we're back for another episode of the Mortgage Broker Podcast. Sitting here with Jason Marshall and Derek as always, and special guest Cory Vance, our partner in Alberta. This one's going to be great. I'm really looking forward to this because we're going to dive into the history of A Better Way Mortgage Group. Cory was one of the partners with the original founding partners who built the foundation that we have today. It's a huge part of why we're successful is the success that they built. So Cory, welcome.
Thanks for having me.
All right. So maybe just a little introduction to yourself, your history in the space and finance, because it's not just all been in the mortgage broker space. And then we'll dive into A Better Way.
Yeah, the history goes back 20 plus years. So 10 years as a broker this summer. Before that was 8 years at a major bank, a blue bank. And before that, I was actually in commercial equipment financing for 5 to 7 years, working with Caterpillar and Mercedes-Benz Credit. So it really helped round out that commercial financing piece, understanding financial statements. And then prior to that, with Royal Bank as well in the retail banking.
Interesting. I actually had no idea you were in the equipment financing. That's actually really interesting. So when you were doing that, were you in Alberta at that time as well?
Yeah, I was a territory manager for the prairies.
Okay.
So Saskatchewan, Manitoba, BC, and Alberta.
Interesting. So how did that help you, or did it at all in the finance space?
It was something I always wanted to learn. Like working for the bank on the retail side, you get to understand what we all do as brokers right now, the retail side with dealing with personal clients. This was dealing with retail and wholesale financing. So heavy trucks, heavy equipment, and also wholesale financing for dealerships. So it really helped round out the financial statement analysis and understanding financial statements, which we do in day-to-day life now. So it really helped round that out.
Have you worked, because a lot of brokers, like we do have access to finance companies to do equipment financing, leasing. Have you worked that into your business today at all?
I haven't. My focus has always been typically on the bank side, like AAA, AA clients has been the focus. So there is many different ways to go in this industry, which is always good, but it hasn't been a focus of mine.
Focus is good too, though.
Yeah. I mean, that's a great point too. It's just like what, I guess, when you were at the blue bank, what were you mainly focused on there? So going from equipment financing and all that, was it right into mortgage financing there?
It was. I partnered with a lady for the 8 years and came back to the bank as a mortgage specialist. And it was basically getting back into dealing with retail customers. So it wasn't using a lot of the experience that I had before, but it was something that I wanted to round out and just give me more options down the road, which it's done today.
So for anyone that doesn't know, A Better Way Mortgage Group has been operational in Alberta since August 2016.
Correct.
As a DLC franchise, specifically not Mortgage Architects. So again, for a reminder, we do own 2 franchises with the DLCG, and DLC was actually the original franchise that the previous owners had when they got into the Canadian mortgage space. Let's go there. Like your relationship with Mark and Lecky, the previous founding partners, and just why A Better Way at that time and where we are today.
Yeah, it's interesting. 10 years ago, before we left the bank, we had meetings directly with DLC and a couple other brokerages. We ultimately decided to go a different direction and joined a group out of Toronto. And what happened was they were newer in the industry and we were new. And so after the end of 2 years, we decided to go a different direction and came back and talked to Mark and Lecky. And Mark and Leck did a really good job on building a business. They started 11 years ago now from 0 agents. So no experience, they weren't even doing mortgages day to day, but they built a team from 0 to what it is today. But we decided to partner and join them. Well, we joined them first in 2016, and later that year we ended up partnering with them, and we had a small team in Alberta on the DLC side that we've maintained till today.
I mean, you just said something key that I think a lot of people would be like, kind of shaking their head like they didn't do mortgages. In fact, they actually never did a mortgage their entire time.
Yeah.
And it was a big reason when we took over to take a step back from mortgage brokering so we could continue to focus on the team support growth and not trying to focus on two other businesses at the same time. Just kind of getting into that. Do you think that's why they were able to develop such a strong foundation here?
Yes, it was absolutely critical. And doing mortgages day to day, which I still do, you can see the importance of having a system and structure in place to support your team. Because too often there's many successful mortgage brokers that are doing a lot of volume and they're lacking in the support. But because they're doing so much volume, it makes it look like they are successful. And as you guys would know in your search for a business, that just because someone does a lot of volume doesn't mean there's a business there. And I think, Derek, you've mentioned, building a book or a business. And that's something that has been a focus for Mark and Lek, to build a business, have process and systems, but they couldn't fall back on dealing with clients and their own mortgage book. So they had to do a really, really good job building that business. So brokers not only came, but stayed.
One thing that comes out of almost every broker's mouth that was here when they were the partners, is just the fact that there's choice, like a choice model, and the transparency. And the transparency comes down to even just a clear split matrix, which, we won't go too granular on that, but just touch on the fact that like how important the choice model and the transparency was and still is today.
It always started with choice. But the biggest thing that Mark and Lek did in running the business is the first question. And the first question was, is it good or better for our brokers? Yes or no? If the answer was no, then we never went through with it. Like, it didn't matter what the brokerage would make, or we could do this or we could do that. If it wasn't better for the brokers, they didn't move forward with it. It didn't see the light of day. So the broker choice piece was absolutely critical in once again, as I said, just not only getting brokers to come, and as we built access, built volume, but keeping brokers. And the attrition rate, as you guys know, coming into the business, which has been critical, was very, very low attrition. And that's due to the process and systems that Mark and Lek put in place that you guys have been able to build on.
So we're going to get into the fact that we are now, we've launched Mortgage Architects. So the Mortgage Architects franchise has launched now in Alberta. We are official with RECA. That is something that, has been, I believe it's been, is it 7 years now? Or how long has it been with BC that we've had the two brands?
Just about 7 years.
Almost 7 years, right? So why don't we touch on that? Two brands, because this is how we've been operating in BC. Two brands, but one team. Like, that's a focus. Like, for me, like we host events all the time for our brokers. Everyone shows up to a degree. I don't even know who's what brand anymore. Like, I don't see Mortgage Architect logos and DLC logos stamped to their heads. Sometimes I wish I did, so I know what brand they were with. But maybe just touch on that. Like, I think we could all probably riff on that one a bit. Like, just the fact that we treat this as one team, one brokerage.
Yeah, that's something that Mark coined years ago. And because when we started, we were running them separately. But what we found was like there wasn't a difference. And so Mark coined the phrase, two brands, but one team. And that was key with our lender relationships. Yes, there's little differences between the networks and what is offered, but we treat everyone just one team, right? We don't segregate on events. Everyone comes to whatever event we're having. So all of our Zoom calls, lender meetings, one team. And that has just been a focus from day one, but also to take that one step further, what we learned in dealing, when you're sitting, and Jason would attest to this, when you're sitting with a broker, you actually can give them choice. Mark and Lek were always about choice, but from a choice perspective, as a mortgage broker, I offer my clients choice. If you want Scotiabank or First National, so the choice part comes in when you're sitting with a broker. And if a broker wants to gravitate towards a corporate model or a franchise model, there's different things that are appealing in each of those models. So that's what we found so successful and helped us grow, was sitting with a broker. We had both options. There wasn't an option that we didn't have, which was critical and what led to a large portion of our success.
I would like to spotlight that a little bit, because mortgage companies don't have two options. Like, there's no one out there that can sit in front of a broker and actually be able to offer two different models. So it's amazing, and a testament to what Mark and Lecky did. Like, they have allowed us to have that opportunity, and it is true. I mean, back to the model of choice, which is the base that this business has been built on, and we continue, and it's massive. It's huge.
Yeah, Jason, why don't you touch on that? Like, just being on the recruitment front, the front lines there, and the onboarding process, which, both you and Cory supports us immensely in the onboarding process. And I'm going to touch on it a little bit from the lender perspective as well later on. But why don't you just touch on the two brands and, the conversation you have with brokers and why one would maybe choose the other?
Breaks down to knowing the broker and knowing what they want, also knowing the key differences between both networks. And, I could dive deep into that. I won't for the purpose of time now, but it's just really, what does the client want? Now, we know DLC is, stating the obvious, they're the biggest brand in Canada. So, some brokers, and primarily what I find coming from the banks, is they like to have that big brand behind them. Bankers notoriously are always rocking their lapel pin of the previous bank that they've exited. So they like to have that big name brand behind them. So DLC's, again, obviously the most recognizable of the bunch. When you look over on the architect side, perhaps it's, a veteran, seasoned broker that's not looking for a lot of the marketing, as much of the marketing tools as you would get on the DLC side, as an example. But what they want is just to have that good access and top compensation tiers, and maybe at a little bit more favorable of a split. So really what it breaks down to is, where are you at in your business? Do you want to build a team out? Do you want to scale your business up? Are you looking for more marketing support and more more customizable approach to your business that the network could help support you with? It's just like we all do. I mean, with our clients, is know your client, know what they're doing, know what they want to do, where they want to go. Same thing with the brokers when we're bringing them into the A Better Way Mortgage Group, is knowing what their plans are, what they put their value on, and how they want to move forward.
Yeah, I mean, well said. It is interesting, just especially talking to, top producing mortgage specialists at the banks, finding that brand so important. Like, just the ability to be able to say, I work with Dominion Lending Centers, and their client instantly know that, where the consumer may not know what Mortgage Architects is or have maybe ever heard of it. So it's interesting to how people make that choice. But just before we move on, just back to the two brands, one team, one thing that just within A Better Way Mortgage Group, Cory and I handle a lot of lender relations side of things when it comes to setting up lenders. And one thing we've been very successful on is having lenders recognize us as one team and not two franchises. And the fact that all of our volume is looked at as one. And it maybe you could just touch on that, like the frustration that we've had, but then also, like, we've pretty much been successful in one on all of those situations where we are today.
The first stumbling block with most of the lenders is first understanding that we have two brokerages, because no one else has two brokerages. So first is just getting everyone to understand our setup, and then we have to talk about, we're not just in one province. We're in BC, we're in Alberta, we're launched in Ontario. So those are key pieces to sit with a lender to help them understand. And then as we all know, like, having access to a lender is one thing, but then having top tier access with regard to splits, but also top tier when it comes to underwriting. Those are key things that we've found that we've been able to kind of chat with our lenders and explain what we're trying to do. And they were very supportive.
I don't want to throw anyone under the bus here, but a lot of brokers we encourage them to do their due diligence and talk to other broker owners when we sit down with them. So a lot of times we'll sit down with somebody that wants to sign a contract with us immediately, and we ask them, like, have you spoken to another brokerage? And if they haven't, we actually encourage them to do so. And what we found is a lot of broker owners will just flat out say, yep, we have access to everyone, but that's not the case. And we know that's not the case. And, typically they realize that after. And back to your point, the attrition rate has been next to none for us taking over this business, and for the previous owners as well. Maybe you can touch on just that what that top tier status means when it comes to a broker choosing to work with us and ultimately staying here.
I think top tier status is, it's unfortunately has a bit of a subjective view in the industry, and do you get top tier status because you're submitting it through a deal desk? And if that's the case, do you know how the deal desk works and the compensation fees, or sorry, the charges around that, or what have you, and how the underwriting process works? So there's deal desk top status, and then there's direct top status, which means I, the broker, can submit to each individual lender and obtain their top underwriting, their top program, and their top compensation tiers. That's a differential that we may have than some of the other brokerages may have. And to Dean's point, I mean, primarily we don't want people to go and speak to multiple brokerages. What you want to have in this industry is transparency around what does it mean to have status and to have that lender access. Now, unfortunately, that's either A, not fully understood, or B, not fully disclosed. But I think for us to be able to give the broker a platform where they can access whichever lender that they please directly under their top program tiers and under their top compensation models, that certainly helps us from a retention standpoint, because primarily with the volume and the status levels that we are at due to the scale, we typically get deployed the top underwriters of that said lender and the top business development managers. So for a broker to be able to walk in and have a turnkey operation where they can just come in, the infrastructure is built, and they can pick up and run their broker business the way that they please and have all the access that they need, it certainly helps with our retention model.
Yeah, well said. So let's just touch on the fact that we are official now with RECA. We have the two brands in Alberta. We are going to, start our growth plans there. We have an upcoming event. Maybe we can touch on that. March 14th, we're going to be hosting a launch type of event for our brokers and especially our lender partners to just establish what this means, talk a lot about what we're talking about right here today, and how that's going to be important for our brokers that are looking to join us in Alberta, whether it's DLC or mortgage architects. So we're looking forward to that. And so with that, we can segue just into the growth plans in Alberta. Maybe Derek, do you have anything to comment on just what we're looking to achieve here?
Yeah, I mean, you brought this up already, but DLC has been franchised in Alberta for going on 7 years now, and we have some amazing brokers that are operational there. And the focus just simply has not been in Alberta since day one. I mean, BC is absolutely taken off. There's a massive amount of brokers there. And again, being able to split this up, we have more people, we have more bodies, we have more support, and we know that there's a market there for our business. I mean, to be transparent, there's a market for a better way in every single province in this country, but we got to focus on what's in front of us, and Alberta's key. And again, the fact that we have the ability to have both of these franchises and we haven't had both in Alberta it's a loss, to be honest with you. So we're really excited to have Mortgage Architects operational. Both of those brands are going to continue to grow, and again, different values for different brands, and just to have that choice model is huge. So we're going to be putting a lot of focus and energy and in building that up. And for anyone that's wondering about volumes, like a lot of our volume currently is BC, a bit of it's Alberta. Thankfully, our lenders are counting our existing volume so that we get status right out of the gates in different provinces, which is massive, because if we didn't have that, you're starting from the ground up. Everything Jason just said is out the window if we didn't have that. So being able to, kick this off with top tier status with every lender possible is massive.
The one thing is, as much as it's a start for Mortgage Architects, the irony is we can hit the ground running, because we can just build on what we've done in BC and what we're going to do in Ontario. So we're not starting from ground zero, and we're fortunate that we do have those lender relationships that we can rely on that will allow us to offer top tier status when it comes to comp, when it comes to underwriters. So we're pretty fortunate to hit the ground running, and we're really excited in Alberta.
100%. Yeah, I can't stress that enough. Can't wait to be out there regularly. Bring our same event schedule to Alberta, like all the things that have made us successful going back from the day that this business started with Mark and Lek. We're going to be there. We're going to be doing that. Starts March 14th with our first event there. We had a very successful mastermind event just before we wrapped up the year with our brokers in Alberta. It was actually really one of the better events I attended all year, just because it was an intimate group, and some of the stuff that was flying around in that group, I'm been working on since. So looking forward to that. Let's touch on the Alberta market. It's been a very different market there versus the whole country. So why don't we just touch on that?
We've had brokers on our team that either are doing as much or doing more than previous years. So it's actually vastly different, and that's a function of a few different things. The supply demand equation is one of the biggest things. There is a dramatic shortage of listings on the market. We're around 2,200 single family townhouses, condos on the market. So we have a city in Calgary specifically of 1.6 million and 2,200 listings. So what I tell clients all the time, it's, if you have one house for sale and 4 people are looking, what do you think is going to happen? So we've heard a lot of noise with, the interest rate cliff and all these things that were happening, but sheer supply, there's a lack of supply. But on the flip side, we have demand. And we have a ton of migration. And when we talk about migration, some of the migration numbers have been the highest we've ever seen. So in the 12-month period to the end of September, we saw 192,000 people move to Alberta. So that's 534 people a day have moved to Alberta. So there's a lot of demand with regard to rent, with regard to buying. So all of that has led to prices going up. And we've seen prices increase 6 to 7% and probably another increase, which helps mortgage volumes go up. But transaction numbers, to be fair, have been down. But all of those other factors have led to our brokers having some of the best years that they've ever had.
The average broker, if we're comparing, the 2022 year to 2023 year, we're down on an average of about 35% in production, and almost no broker saw a reduction in Alberta, at least for our group. And to your point, a lot of them have actually seen record years. So that's super key to touch on. Just one, you mentioned migration, like a lot of it's actually just people leaving other provinces. So it's just other Canadians, seeking Alberta for probably affordability reasons, I would say, number one, which based on what you're saying, that could be starting to go away as this market continues to get,
it's definitely not what it has been. But when you talk migration, there's 2 levels to that. There's international migration, which is probably about 60% of that number that I gave you. But the interprovincial migration is around just under 30%. So a lot of people moving from Ontario, a lot of people moving from BC, cheaper housing, better job market, all of those are factors that have led to, the numbers, the growth numbers and the average price increasing, but certainly not as high as it is in BC or Ontario.
I don't know if you have this or maybe just an average. Do you know kind of what the appreciation was over the last 1-2 years and like average single family home value in Calgary?
Average last year was approaching 10%, and the previous year before that was 6 to 8%.
And previous to that, for quite some time, it was nil.
Yes. Well, we don't talk about that very much, but the previous probably 12 years, there was nothing.
Yeah.
Where we were just a flat, and then it went that way. So there was always that opportunity for us to grow, but it's just everything lined up for us to have, and not all dependent on oil. There's a few other factors that have gone into that.
We didn't have this on our show notes, but one thing that comes to mind a lot, especially when I'm talking to lenders, is just the amount of insurable business that we do in that province. Like a lot of folks in BC or Ontario, their top lenders are big banks because of the access to uninsurable products, right? But the insured business is pretty much thriving there.
It's massive.
Yeah.
Like it's everywhere, and especially when you talk about Calgary or Edmonton, those are the highest prices. But then Medicine Hat or Lethbridge or these other markets, like to hit $1 million price point is becoming a little more common, but it's truly an anomaly in the smaller markets.
And a lot of folks can afford to qualify with a 25-year amortization, and they can afford to put 35% down because of the threshold, the affordability piece. So like super interesting there, and it is very different conversations that we have with our lenders about volume expectations and what the volume that we are doing in that province versus the others. So interesting piece there. Just maybe like a market forecast, like where do you see things going?
The current forecast and the Calgary Real Estate Board came out 2 weeks ago, and the forecast is anywhere from another 6 to 8% increase in the market. So we will see. We do need to see supply come on the market because we are in a situation, and we were talking about this before, where there's offers without conditions and clients forced to make a decision to buy a house today because if not, 3 other people are going to buy it, which creates situations that you guys have seen in BC for many years, but it's happening more and more. So we do need to see some supply hit the market, but there's nothing on the horizon that is leading us to believe there's going to be a bunch of supply.
I mean, it's clearly like a much more exciting market than it has been here. So that it's a great update. And I know any of our listeners that, aren't licensed in Alberta or aware of what's going on there would appreciate that. So maybe we can just kind of wrap up the episode with some tips. We got some good stuff here. We'll start with just around, just communication and technology. Maybe you can kind of take that away.
There's a lot of push in our industry to talk about technology. And I guess one of the things that I've just learned in my mortgage business and dealing with brokers is that communication part, which the communication piece is so key when you're dealing with referral partners, you're dealing with clients, but there's 2 types of communication. There's synchronous, which is what we're doing right now. We're all talking and you get immediate feedback. But the second type is asynchronous, which is hard to say. But that is where what we will do after when we send this podcast out, we send it out and it's a way of communicating, but you're not going back and forth. So it's not live. So one of the things that I've tried to do in my business is not hide behind technology, but embrace it or use it to complement. So one of the things that I use is Loom, where you can record yourself and you can do a screen share. So I do a commitment call with clients where I share that information in an email that let them know great news that we're approved. Here's the next steps. But I do that and I include a Loom video that actually goes through the commitment package with the clients. So the nice part about that is that process for me takes anywhere from 5 to 8 minutes. But the better part is that goes to all parties that are going to be on the mortgage and they can review it. If they want to review it at 10 o'clock at night or 3 in the morning, they can do that. They're not waking me up to do it. So the asynchronous way of communicating with a client is sometimes a better way to get a message across as opposed to just a text or just an email where things can get lost, but you can also cover things off. And that's where I found Loom in communicating the commitment package with a client is a key piece. And Dean, you and I even use it in our day-to-day business where it helps, where we don't need to have a conversation, but we can communicate a message.
100%. I mean, I use it frequently, especially when having discussions with staff, especially like, hey, I can't find this item in the CRM or the drive folder, or how do I do this action on this? My response is very rarely a written response. It's a quick video on Loom and showing them exactly how to do it. It takes me 2 minutes where, I might have to wait for a phone call to connect with them to talk to them about it and go through that, which would probably take, 15, 20 minutes when I'm on the call. Versus, or even worse, writing an email to explain that. So,
let alone the time savings in that,
100%,
where my client commitment process, if you're doing an email or you're doing a face-to-face meeting, was anywhere from 30 to 60 minutes to do a commitment, which is now synthesized down to 5 to 10 minutes. So the time savings has been massive.
We've seen huge value in that, even just from a training perspective. Like we have, actually probably close to 100 hours of pre-recorded Loom videos that train our staff when we were onboarding staff to work in the mortgage business. They could watch, they could watch videos for 3 weeks before we even had to, have an hour with them, and they would be up to speed just based on that. So
I think just like the concept of Loom, you can look at other options too, like a podcast as an example. I mean, when we were hands-on with clients, dealing with subject-free offers, we would send them a link to a 20-minute podcast that talked about everything you need to know about subject-free offers, and then we would have a call with them after. Like, it just makes everything more efficient. So the more content that you can record and host on social media, YouTube, wherever, it can definitely make your day a lot more
and they
efficient.
can consume it where they want to.
Yeah.
Because sometimes it's not convenient to do it at 3 o'clock in the afternoon. It could be 9 o'clock at night.
Yeah. For any of you that are looking to, take action and utilize one of these items, they'll be in the show notes. Some listener interaction. So this is a segment that we like to do just to get feedback from you, address any questions that you have. The question that's come up quite a bit is, how do I get licensed in Alberta? If I'm already licensed in BC, and what does that look like? Maybe Jason, just being on the front lines of the lead on that process, you can take that away.
Very, very hot topic right now. I would say, especially with British Columbia brokers looking into Alberta, clients are moving into Alberta from, as we previously spoke about, affordability and what have you. Referral partners are even moving into other provinces. So how do I get licensed in multiple provinces is becoming a hot topic. And to be clear, for the broker that's listening, if you are not licensed in the province the property is located in, you are not allowed to facilitate that transaction from the regulatory standpoint. So the way that
sorry to interrupt, but the key piece is, even though a lender will approve it, just because they'll approve it doesn't mean the regulator is approving it.
That's a great point. Some of the lenders will approve those, but when they go through either A, your network's compliance, or B, if the regulator of that said province picks it up, you are not compliant in that file. So what we're seeing is either A, if you want to have those applications done, it's running through a deal desk that the network provides, or B, what's happening now is we could actually help you transfer your license credentials from one province to the other. And really, it's a big fancy word, but it's called a reciprocity. And essentially, I handle all of that for the A Better Way Mortgage Group. So we've helped lots of our brokers get licensed in multi-province. And the benefit of that is, once you do transfer your license, say from British Columbia into Alberta, you then can access those files directly through the underwriters of the lenders that we're going to use. And it does become a fairly easy process. Essentially, RECA is asking BCFSA for your license credentials. BCFSA then transfers your license credentials over to Alberta. A few other things that we have to piece together through that, but I'll walk you through that process every step of the way. What you really have to look at is am I going to have business out there, and is this going to make sense for the cost? So we have to look at what the licensing cost is to maintain licensing in a particular province. Does it make sense for you to do that? Are you going to get more than 1, 2, 3, 4, 5 deals a year, whatever that benchmark is? If it does, my opinion, it's always the best to have direct access so you can control the file start to finish. And, not many brokerages have that across the country set up, but we can certainly help you out with that process or answer any questions from anyone that's outside of the A Better Way group that wants to talk about that as well.
I mean, key things you mentioned is just maintaining control of the file, not having to go through an access test, whether it's great or not. Our experience about being around a lot, other brokerages in our careers, those are very difficult departments to build and have consistency there. So the control piece, I think, is key. And number one, cost is around $600 a year, roughly, in the province of Alberta. Is that correct? So one deal a year would be more than suitable to making that decision. So yeah, I mean, great episode. I really appreciated you coming on, Cory, just touching, especially on the history of A Better Way and especially the Alberta market. It's really interesting just to kind of see how different it is. And we'll leave it at that. As always, if you're a mortgage broker not with A Better Way Mortgage Group, looking to join us, whether it's BC, Alberta, Ontario, or just have questions in general about how we operate, we're more than happy to work with you and address any questions you have. So please don't hesitate to reach out. And thanks for listening, and on to the next one. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddy steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening and see you on the next one. We're here in the warehouse today. There's over 25 of us packing. The goal is to pack as much food as we can for the kids in the next 2 hours.
We are stuffing bags to help feed kids that don't go home with meals on the weekend.
I'm actually unpacking and getting the food ready for the boxes while we have a crew packing individual bags.
Hello, we are here at the Backpack Buddies. It's a great cause. We are super happy to partnership with the Equitable Bank.
Feels pretty awesome. It reminds myself, and I'm sure everybody else, how thankful I am that I have meals to put on my table.
Phenomenal cause. Our partners Equitable Bank are supporting. A lot of our brokers are in-house as well.
At the end, we have Jason packing them into bags of 5.
Super happy to be a part of Backpack Buddies. Awesome charity that the Better Way Mortgage Group is supporting. Super happy to be here, and yeah, let's get a lot of food out. We just learned a great stat that this actually feeds 6,000 kids a week all throughout BC. Amazing cause and a great day here.